Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and my guest today is iFAST Financial India, totally brand new firm. Not sure how many of you guys have heard about it, but it's really interesting. Okay, can say in a certain way it's our first multinational or our first regional company that we have on our podcast, and we're going to talk about global investing. We've done that a few times before, but this is going to be about different regions, right? How do you choose a good country or a good region to invest in? Now, iFAST, why is iFAST well placed to answer that? Well, because it's got a strong and independent international research team that tracks this. Okay, in fact, iFAST Corp is one of Asia's largest wealth management fintech platforms. It was founded in the year 2000 and it's based in Singapore. And in India, iFAST has got two business models. Okay, the first one is an online mutual fund platform for investors. Okay, stuff that you would do normally. You go to a website and you check out what's there on offer. So their online mutual fund platform is called fundsupermart.com, and they've also got a B2B platform. Okay, that's ifastfinancial.co.in, where iFAST enables distributors and advisors to deliver multi-asset investment and advisory services. And to explain more of what iFAST does, I have with me Erik Hon, Managing Director of iFAST Financial India Pvt Ltd. Erik, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you for having me on your show. I'm really very happy to be on your show to share some of the insights that we have, on global investing. Now, for iFAST, our mission statement is actually to help investors around the world to invest globally and profitably. Right. So with this mission, we started in 2000 as a .com online platform for mutual fund investors that focus on two things. Right. One is technology, and the other one is education. Right, we believe that with technology and education, the investor can actually make money from investments, and not to make money for the people who are selling the investments. Right, so with that, we actually built the platform, right, for online investors to do it on their own, and subsequently, we also built a platform that cater for the financial advisors who are independent, right, who are a fiduciary, right, to manage the investment for their clients. Right, so that is the main focus of our business, and right now we are actually in existence since 2000. In India, we started in 2008. Right, we are listed on the Singapore Exchange, right, since 2014, and we're now in 5 markets. That is India, Hong Kong, China, and Malaysia.
Fantastic. That's my first list, company that's listed in Asia on my podcast. So thank you so much for joining us. You joined iFAST back in 2004 in Singapore. So you're a veteran. I mean, you've been in this for 17 years. How's been the experience so far? And you said the India wings are in 2008? So that's 12 years. So did you come into India in 2008?
No, I actually I have been coming to India on and off since the start of the business, right? But I have only just become a full-time MD, spending most of my time in India in the last 2.5 years, right? But we have been coming to India since 2008, right? So I've been quite familiar with the Indian markets and the Indian investors.
Yeah, you'd have seen that that entire change, right? I mean, from where things were in 2008 during the financial crisis, and how there weren't so many SIPs and people weren't that into mutual funds, and now suddenly in this last 1 year you've got so many demat accounts open, everybody's doing stock trading and everybody's into mutual funds. Must have been a lot of fun, right? All this last 10 odd years.
Yes, I think I've certainly seen a lot of changes in India, and that's why we are so exciting. So excited about what is going to come in the future, especially when the investors here are starting to understand why they need to look out of India to invest.
Yeah, and that's, in fact, let's get right onto that. Look out of India to invest. Okay, so Erik, I want you to tell our listeners from an asset allocation point of view, why is global investing important, right? Because as of now, I'm guessing that a lot of investors in India are new and their exposure is mainly to the Indian markets. Although I think the data from the RBI also shows us that since the RBI opened up remittances abroad, a lot of people have started investing abroad directly. And there are quite a few index funds, ETFs, fund of funds out here that offer you to invest abroad. So let's start this. Okay, why is global investing important from an asset allocation point of view?
I think to start off is very simple. When you look at your iPhone, all right, the things is the parts in the iPhone, all right, how many of those things are actually made in India, right? The software, the apps, all of these things that you have in a single phone, how many of these things are made in India? Right, I think you will know that actually not that many things are made in India, right? Your chips are made in Taiwan, right, or Korea, right? Your apps can be from Facebook, you know, from the US, your WhatsApp in the US, your Instagram, US, right? Your TikTok, China. So if you just look at a simple phone, you can really tell you that the companies that produce the phone, whether the hardware and the software, are companies from all over the world. Right, and if you want to invest, you obviously want to invest in companies that have a global footprint, correct? And you want to do it in such a way that your risk is not concentrated only in one company or one industry, right? And also not in just one market, right? So when you invest all over the world, right, you are able to get the benefits, right, of spreading your risk, right, of tapping on the global growth story, not just the Indian growth story, but the US tech growth story, or the Southeast Asia growth story, or the China growth story. Right, and another one benefit that we have seen in the last 10 years, and is actually looking at the currency upside of the USD versus the rupee. Right, if you're looking at it in the last 1 year alone, right, the Indians who are investing in S&P 500 index actually have earned about 17.3%, right, which is 2.1% due to the currency depreciation against the dollar. Right, and similarly, in the last 3 years, the Indians have actually earned 5% more due to the currency benefit, right, when they invest in the US index. Right, so these are just some of the key benefits that when we look at from a global allocation point of view.
Very interesting, Erik. When you say, I get that, you know, because as an Indian sitting out here, I'm selling rupees and buying dollars. Like, let's say that I'm buying shares in an Apple, I'm actually buying a dollar asset. So as the dollar gets stronger or the rupee gets weaker, that is something that's over and above the capital depreciation that the stock price gives me. Great. Now I want to ask, because, you know, this is iFAST is international, right? You have a large team that tracks a lot of countries also. Now, when you, in the previous question, you spoke about US, which pretty much has a lot of the companies that you spoke about when you look at the mobile phone, whether it's a Twitter, whether a WhatsApp. And then you've got some, you know, then you've got Europe, then you've got Asia, and within Asia, you've got some fairly large markets. Could be Taiwan, could be China, could be even Singapore, Hong Kong. How does iFAST assess these different regions for global investing? Because my guess is that a lot of us sitting out here in India can only see the S&P 500 and can only see the NASDAQ and can only see the Dow Jones stuff here. But you have a vantage point of assessing different regions. Tell us how you do that.
Yeah, so when we look at the world, right, we will look at it from the valuation point of view as well as the earnings point of view, right? These two actually, it determines whether a market is overvalued or undervalued, right? And when we look at it, we also look at the upside potential, the expected earnings growth in those markets, right? And also the access to the unique the businesses not listed on the Indian markets. Right, so on the economic outlook, we also look at the expected GDP growth, right, the demographic change, right, the structural growth of the economy, the domestic and international trade, and other macroeconomic indicators that also include the risk factors and their impact. Right, so most of these drivers are actually quite different from that of India, right, and they are also at a different stage of development. So which is why when we look at this market, right, we can actually see the different the opportunities, right, as well as the risk, right, to invest in these markets.
Okay, so guys, we are going to take a small break out here, and when we come back on the other side, we're going to give you the actual solutions, right? We're going to talk about how you can buy the products that can help you diversify globally. And actually, Erik, I'm going to slip in one more question out here. Do you guys have some kind of a ranking of different countries that you like or you don't like, or any recommendations that you're giving out to your client that you can share with the listeners? Just generic stuff.
Yeah, we do have a very simple rating of a 1 to 5 to look at a market whether it's attractive or it's not attractive. But one thing about the global allocation, it doesn't mean that when a market is unattractive at the moment, you totally don't invest anything in it. Right, you do still keep your money invested, because over the long term, right, the stock market will move and the valuation will move, but you just simply allocate less of that and then you allocate more into a market where it is viewed as cheaper at a point in time.
Excellent. So, folks, don't go anywhere. We will be right back on this very special episode of Paisa Vaisa. My guest, Erik Hon of iFAST, will be right back. And welcome back to this episode of Paisa Vaisa. My guest, Erik Hon, Managing Director of iFAST Financial India. And in the first part of this episode, we spoke about the concept of global investing. We also spoke about what iFAST does. Very interesting stuff. So now we're going to get into how iFAST can actually help you in achieving this diversification into global products. Okay, so Erik, welcome back. Let's get into specific questions out here, right? So the first question I'm sure that all of us have, our listeners have, is what are the various products that can help me as a listener of this episode diversify my portfolio globally? Let's get into that.
Right. I think the best way for any new investors to look at the global products is through the mutual funds, the international mutual funds that is available in India right now as a feeder fund. Right. So this fund, they invest in some of the best performing global mutual funds in the world, and it's very easy for the investors to buy and sell into these mutual funds. All right. And India itself, we can see the trend actually that is picking out in the last 1 over year, where the growth of the AUM in the international funds in India itself in the last 2 years actually, right, is more than 200%. Right. In the last 12 months, we've seen a double-digit AUM growth. All right, in the international fund. So it's very clear that more and more investors are looking at this opportunity, and that is actually the fastest and easiest way to gain exposure to the global markets. Right. Another way that many investors go to is through the LRS route, which is the liberalized remittance scheme, right, where they can get into the direct international equity and bond exposure, right, through, let's say, a platform in Singapore, right, that we also have, right, that they can actually buy into the equities in the exchange of the US, right, in Europe, in Asia, right, in Hong Kong or China, right. But the best way we think is actually through the mutual fund that's already available in India.
Okay. Erik, you said feeder funds, right? Can you just take us through the landscape out here? Because I remember last year sometime I had also had Pratik Oswal or Motilal Oswal talking about the S&P 500. So just as a kind of a very small primer for our listeners, what are the various products out there? There could be an index fund, then there is a fund of funds, a feeder funds, and an ETF. Just a general overview. How are these different from each other?
Right. Actually, the definition of a feeder fund, like what the name says, is that it fits into a mother fund. Right, so the mother fund is the fund that actually invests into the equities, and the feeder fund is like a fund that is wrapped around the mother fund to make it accessible to the investors in that country, right? Because there's no fund in India itself that directly invests, let's say, in the US, right, or in China, right? Yeah, you actually wrap around the mother fund that maybe in Singapore, maybe in Hong Kong, right, that invests directly into this market. Right, so there is also a cost difference, right? The feeder fund itself also has its own cost because it needs to manage the liquidity, all right, of the fund itself, which makes it easy for the investor to come in and get out of the fund, right?
Very interesting, yeah.
So basically, a feeder fund is just like that, right? And a fund of fund is basically also like a feeder fund, right? We can call it like a fund of another fund, right? And that's why when we come out with the research on the recommended funds that we ask the investor to look at, right, we also look at the mother fund, and the mother fund usually has a longer performance because it's been around for a longer time, whereas a feeder fund takes into account, of course, the cost of running the feeder fund in India, but the history of that fund and the performance is shorter, but largely the performance is, of course, linked to the mother fund, but less of the expenses of the feeder fund.
Very interesting. And there's enough liquidity and, size for someone, say if I don't have a very large, if I want to start up an SIP of maybe just $100, which is like 7,000 rupees or, something of that sort. Is there enough liquidity for a retail investor out here in India, or are there minimum sizes that could probably, prevent me from buying that?
No. I think when you buy into a mutual fund, then that's the main benefit for a retail investor, is that there's no liquidity challenges, right? Which is why you are able to access these markets. And the last 1 year alone, I can see that actually more and more of the fund houses are actually rolling out or partnering with the global fund houses to roll out more international funds, right? And that is actually a good thing, because now the Indian investors can look beyond India and look at all the opportunities all over the world, and also don't concentrate all the risks into one market in India on its own, they must spread the risk.
Okay, Eric, I think we've covered good ground in explaining the concepts and how global investing works for our listeners, and even on the product side. Let's get into specific recommendations. Okay, do you have any specific products that you would like to talk about to our listeners, or maybe a general asset allocation pie that can help them to actually, maybe if they're thinking of allocating $100 or 10,000 rupees per month, how should that be allocated in your opinion?
Right. Okay, so I just want to start off first is that the asset allocation first based on the risk appetite of the investor, right? So everybody has a different risk appetite. So that depends on their risk and the goal that they are trying to achieve by investing, right? So having said that, let's say I'm an aggressive risk appetite. So I will have 80-20. So 80 in equities and 20 in fixed income in debt. So in the 80, right, then I will want to allocate it based on the different markets in the world. Right, and our methodology is based on firstly, all right, the GDP and the market cap, right, of that region or the country in terms of how we allocate in terms of geography. So for the US alone, all right, we are allocating about 40% of the equity portfolio in the US, right. That follows by Europe. We are looking at it at 20%. Right, and then we are looking at Asia, and Asia that includes the Greater China, and Greater China that will be China, Taiwan, and Hong Kong, right? That will be another like 10%, right? And India itself, we still give an allocation at about 10%, but we are only looking at index fund in a global portfolio for the India allocation.
Very interesting. And what is your 40%? So I'll just repeat that for our listeners. 40% USA, 20% Europe, and the balance in, I think, a wide variety of countries within Asia, right?
Yes, in Asia,
okay,
and the emerging markets. So the emerging market includes the likes of your Latin America, like Brazil, right, and your Europe also can include the emerging Europe, right, Eastern Europe and Russia. Right, so these are some of the allocation. Sure. Yeah,
lovely. I mean, how this sounds quite exciting. How so? And what, if I go ahead with this, what would my portfolio look like? I mean, what funds or what kind of funds would I be holding in my portfolio if I diversify into this? And I'm guessing that you're also talking about active investing out here. So maybe the 40% US might or might not include an S&P 500 fund, or what would my portfolio look like out here?
Okay, the specific products, I mean, I will just do a plug for our first global investment conference, which I hope your listener can join us on the 25th and 26th of February, right, which we will actually launch our recommended portfolio and funds, right. Just to give a heads up, like some of the funds that we are recommending in the US region, we are actually looking at two funds. We are looking at an index, the S&P 500 index fund from Motilal Oswal, right, and then the Franklin Templeton US Opportunity Fund, right. So you'll be finding that we are actually looking at an active and a passive fund, right. The reason being is that because the allocation is at 40%, it's quite big, right. We believe that both strategy will actually help, right. For instance, now we know that the Nasdaq and the tech stocks are actually quite heavily weighted, right, on the S&P 500, right. The benefit of active management is that the fund manager can see and decide that he want to allocate less into a tech fund, all right, then move it to the consumables and other areas of the sectors where they feel that it will benefit once the economy rebounds, right. Whereas when you go into an index fund, all right, it just follows based on the market cap, correct, and that's why now you look at the technology weightage is actually quite high, right. So we decide that we want to have both the active and passive in a strategy for US. That's why we have an active fund and a passive fund to split that 40%, right, for the US exposure.
Fantastic. Eric, if you can tell our listeners about the conference that you were just talking about. So this episode is going to go out pretty soon. It's going to go, I think, just before your conference. What are the dates of the conference? What is it about? What can our listeners look forward to? How do they register?
Right. Okay, so we are doing the first global investment conference in India, right, on the 25th and 26th of February, of which we will actually get the fund managers, right, to share their market outlook, all right, and also how to create a global portfolio. We will also be sharing our recommended international funds and model portfolios that the listeners can actually look at to see how they can allocate. Right, and they can look forward to 2 days of very interesting insights, all right, from the global experts coming from all over the world, right? And also how to rebalance a portfolio.
Fantastic, folks. So, and where can they learn more about this? And in fact, I mean, tell us about your website and any resources that you might have if our listeners want to go and learn more about this concept of global investing and hopefully even attend your conference.
All right, you can actually go to our Facebook or LinkedIn pages or visit our website at events.ifastfinancial.co.in to register for the event, and it's free.
Fantastic, folks. So you should be looking to take to attend that conference if you want to know more about this very exciting idea about global investing across regions, right? Because Erik mentioned that he's looking at USA, Europe, and emerging markets, which could be Asia, could be Latin America, could be. It sounds quite exciting because at one point of time, this used to be institutional stuff, right, Erik? I mean, you could only, as a fund, you couldn't do this at a retail level. This is quite exciting, isn't it?
Yeah, it is. I think, when we started in Singapore, right, and Singapore and Hong Kong both are very, it's an open market. So we started off with global investing from day one. Right, but India and China is quite similar in a way that there is a capital control, right, and also most investors start off of just investing in their home country, right, like many of the developing countries. But over time, when the investors become more sophisticated and they understand the risk of just putting all your eggs in one market, right, then the demand increases, right, and therefore I think we are seeing that stage right now happening in India, where the investors understand the benefits and the risks, all right, of investing globally, and therefore we are seeing this great opportunity for them to actually look at the world and see, all right, it's time for me to gain the global exposure.
Fantastic, Erik. I wish iFAST all the very best with the conference. Maybe we can have you guys back, after the conference is over or after a few months, once this trend hopefully starts picking up. So, folks, that is a wrap on this episode of Paisa Vaisa. My guest, Erik Hon, Managing Director of iFAST Financial India Pvt Ltd. Erik, thank you so much. Thank you so much for doing this for our listeners.
Thank you, Anupam, for this great opportunity. Nice talking to you.
Cheers. Thank you. And listeners, if you like this, podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. Thank you so much for listening to Paisa Vaisa.